not locked in here with you. You're locked in here with me.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. Licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. Coming at you with a new, and I like to think exciting show. Lots of interesting news to cover today, so we'll get into that. Not just in the housing world. Well, I guess it's still the housing world. I hope everyone had a fantastic holiday weekend as we wrapped up Memorial Day. For me, it was a busy time. Mostly for myself, to be honest. I wasn't really showing clients around anywhere. I was showing myself around. I was looking at different properties. I'm thinking about jumping into the old house hack scenario, right? Where you buy a property that it has multiple units on it and you live in one unit and rent the others. It's kind of something I've been thinking about doing for a while. As much to just test those waters as to turn it into a fantastic investment. In other news, I have finished my 2020 updated video on, I've shot the video. I haven't edited it yet. I have shot the video to update how to search for properties. It's sort of a step-by-step. I focused on Phoenix, not so much because I want you to search Phoenix. This is supposed to be a skills thing, right? So this is how I would go about starting your skill building exercises in finding investment properties based on the criteria you decide are most important. And through the video, I discuss various priorities I personally have. Yours may be different, but you can modify how you search based on that. And I hope it's super useful for everybody. My goal is to have that posted maybe even the same time this show goes live. I'm actually recording this show right now before Memorial Day. Today's Saturday, so you'll be here. I'm thinking about posting it Tuesday since all of you will be off on Monday. And according to the experts, the best time to post these things are early in the morning so you can jump in during your commute to listen to them. And I know a lot of my folks consume the show that way. So you might want to head over to YouTube, or if you are a member of the Rebel Underground, you will get an email as a member of the Rebel Underground on the availability of that video. So be sure to check it out. I think it offers a lot of changes. For those of you who are members of the Rebel Underground, you were the only ones who got that video back in 2018, 17. I'm not sure when I last made one of these things. I'm going to start doing one every year, though. Everything has changed since that video. So I believe you get a welcome email to joining the Rebel Underground that gives you a link to that old video. I'll be changing that to the new link as soon as it's posted. But keep an eye out for that. If you want to join the Rebel Underground, go on over to therebelbroker.com. There's a button there to join the Rebel Underground. I don't spam you. I don't sell your information. I treat you with the kind of respect I'd like to be treated when I sign up for different things, but tend to not get treated that way by so many sites. So don't panic. You're not going to suddenly get tons of spam in your inbox. In fact, the only complaint I get is I don't send enough stuff to members of the Rebel Underground. Okay, so let's move on to the first bit. Two super interesting bits because we are seeing changes in the landscape of real estate really that go back to when I first started the show. Now, for those of you who are new, I've been doing this show since January of 2007. So it has been a tick that I've been at this. 13 years is a while. And what's interesting is this first little tidbit of news that I want to share with everyone, it was 13 years ago that we saw this. And why is that important? Why is 13 years a magic number? Well, if you look at, and this is something we've discussed a ton on the show in the past, as you know, we were building homes like crazy leading up to the downturn. Now, the peak of the downturn was right around 2006, 2007, right in that ballpark. And this number relates to the number of new homes that were being built. So one thing we've discussed here in terms of things that needed to change in order for the real estate market to modify, right, to suddenly make a pivot, would be for a lot more homes to be built. Now, what's interesting is we've seen a pretty substantial jump in the number of new homes being built. Now, let's calibrate ourselves to this. I will include an image that and a link to where you can go look at this data yourself, so you don't have to take my word for it. But we've got a chart that shows us very clearly 2006 was the peak. In 2007, the decline had already begun, but we are way off from what the peak was. But the number of homes, new family starts that happened most recently, and the trend that we're seeing is a extremely big jump. If you look at, and there's several ways you can look at this chart for those of you who will end up looking at it. But if you look at first the max, or 25 years, I think is probably the best place to start, you can see the buildup, right, to 2006. Dramatic, crazy drop to 2009, where we sort of flattened for about a year and a half, and then sort of had a gradual increase that sort of actually mirrored the lead up to 2006, which is a whole other concern, right? That we shouldn't be comforted by the fact. I've always said we have so many different folks who say, "Wow, I sure do wish we could get back into that market leading up to the downturn, right? Let's get back to that kind of market." Well, you don't want to be in that kind of market. That was an artificially created market that was bolstered by really bad lending practices that really got rolling in 1999. So it took 8 years for things to go really nuts. Now, it was 1999, 2000 when, sort of in line with what the policies that were being put out by the government in terms of how loans were being handled and how lenders were being dealt with, as soon as they sort of unpacked the idea, hey, wow, we could lend to an awful lot of people. And remember, lending equals profit. A lot of people don't get that. Banks want to lend you money, right? Now, they balance that with risk, but part of that risk is also dealing with regulations from the government. And so regulations that the government were putting out and different programs they were putting out were helping to reduce the concerns that banks have relating to risk, right? Particularly selling the loans that they underwrote on the secondary market. And what that equals is not only selling it to potentially other banks, but potentially selling it to Fannie and Freddie, right? To selling it to the government. And many of the loans that these banks underwrite are with the specific intention of then selling it to the government, because then they have no risk, right? There's no risk on their end. If you default on that, that's why it's so frequently after you get your loan. A good example is my loan. I refinanced earlier this year. Within a month, it went to another bank. Within a month of that, it went to another bank. And now I just got a notice that it's going to go to Fannie. So it has been offloaded to a government agency, a government entity, or a non-governmental. It's run by the government. It's not a quote unquote official entity, but it's a government entity that basically says we'll take all the risk, right? And we talked about this a ton during the downturn and what all of it equaled. So the banks want to loan you money. If they're responsible for all of the risk and can't offload it to anyone like the government, they're tighter, right? They're a little bit more strict. They want to make sure that there's no risk of them losing their money, or that if they do underwrite your loan, that you represent a good risk to folks who might want to buy it on the secondary market. Okay, so that, and I realize I kind of went in the weeds there a little bit, but it sets the stage for understanding what made things go nuts was there was so much ability to offload to other or governmental organizations that would take on that risk that we were able to write things like 110% loans, loans that were just on stated income. These are not loans that banks just said, let's do this. These are loans where the government said, hey, yeah, we'll buy loans that fall into that category. Well, why not write that loan if you know you can sell it and not have the risk? Right? of worrying about whether or not it's going to get paid back. Okay, so that sort of sets the stage. And that's what led to so much buying and so much crazy growth in prices, because you artificially inflated the number of buyers, right? You had folks who shouldn't have been able to qualify qualifying. And we actually have that going on now. It's the exact same problem, but the other side of the coin. And again, I've done shows on that all over the last year, so go check those out. But anyway, getting back to the point. Whew, sorry. Hey, sorry. I do this sometimes. The point here is that we've seen a big jump in the number of new housing starts, and we are going back not to 2006 levels, but 2007, which represents the highest we've had in 13 years. I actually think that's a good thing. But in the nearer term, just over the last year, it represents a pretty big jump. Like for instance, if it's the biggest jump over the last year. It's the biggest jump over the last 5 years. It's the biggest jump over the last 10 years. We just haven't seen these kinds of jumps in the number of new homes being built. Now, and don't just take that as a number, right? And say, oh, okay, good or bad or whatever your conclusion might be. Understand the mentality that drives it. This says builders see a demand, and I would argue the demand's been there for quite some time, and they're willing to jump in and do it and sell these things. The question's going to be, at what point in the marketplace do these homes exist? Now, I don't have any breakdown on whether or not this is just a repeat of luxury homes, but I don't see given the performance of luxury homes and given how flat the number has been the number's been really flat. I mean, on average since 2016, with quite a bit of growth from 2010 up to 2016. But I don't see a lot of motivation in the marketplace for this to be a luxury thing. Luxury has been the most underperforming property type in the last year in terms of how quick it sells, in terms of demand and all those sorts of things. So my hope is that these end up being single-family residential homes that are more middle of the road, right? And let's hope that's true. Now, I'm not seeing a lot of that happening here in California. You folks out there in other areas will have to tell me if you're seeing this in your area. A lot of the stuff I'm seeing here is still relatively high priced, although there is a brand new development just down the street that is all mainstream, all sub 800,000 here in Morgan Hill, with the average price in Morgan Hill being 850 to 900,000, and depending on which quarter you're looking at, even more than that. That's actually really good news. So I just contradicted myself there, but I do see that happening. But I also see still some luxury. But in looking at the overall markets in Santa Clara County, I am seeing a statistical increase in the number of properties that are being built that are not luxury. So I'm seeing it a little bit here. I'm just not seeing this dramatic jump. And when you if you want to look at the show notes to see this graph or follow the link to this graph, you'll see what I'm talking about. It's a big, big jump. And it's odd because what we've had is not a steady increase over the last year or so, 2 years. So anyway, take that for what it's worth. Check it out for yourself. Construction of new homes. Now, this is from WMBF News. This must have been from another source, right? But I'm not seeing any links to anything else. And let's give you just some numbers. The Commerce Department reported Friday that builders started construction on 1.61 million homes at a seasonally adjusted annual rate in December, up 16.9% from the November pace of home building. It's been rising steadily since July, although this has been what we've seen most recently is really a big jump. Unemployment rate approached a half-century low. Builders started work on a total of 1.29 million homes, the best showing since 2007. The December building rate was the strongest number since December of 2006 during the last housing boom. So it doesn't equal 2006, it equals 2007, but it's the highest we've had since 2006. Application for building permits, considered a good sign of future activity, fell 3.9% in December to an annual rate of 1.42 million, but remained well above the pace in July. So the total number of permits dropped, which obviously is something we need to be concerned about, but still the numbers we're building are much higher than normal. Construction of single-family homes rose 11.2% to an annual rate of 1.06 million homes last month, while apartment construction fell 9.6%. And again, if you've been following the show for a while, you know that is good news. I think the reality is apartments have been overbuilt in an awful lot of markets. I absolutely think that's been true in my area. We've talked a lot about just the anecdotal feedback from apartment complexes I've seen built here in Silicon Valley, where there are still signs up where they're giving incentives for people to move in. So clearly those folks are experiencing vacancies and on a scale that make them willing to give incentives, which spells clearly an indicator that there's a lot of competition for that kind of housing and that there may be too much of it. I like to see that, because if that doesn't work, the next thing you usually see is a reduction in rent rates. And I think that would actually be good for that market in general. All right, we're going to go ahead and take a quick break, but when we come back, we're going to continue with this and also talk a little bit about California December housing, the sales statistics in terms of how many homes are getting sold versus inventory. So don't go away. We're going to talk about that coming up next.
Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner, broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909.
All right, folks, welcome back. Man, I really need to upgrade that, because it's not 25 years, it's 30 years now. So it's been more than 5 years since I did that ad, which is actually kind of creepy. Anyway, okay, so as we were saying, construction, I think, is actually encouraging. That's usually a good, and despite the fact permit requests were down in the most recent numbers, it was still, on a year-to-year comparison, way up. It's just going to be interesting to see how these end up getting deployed to the market and what kind of homes we end up with. The most encouraging news is we saw single-family residential increasing while we saw apartments decreasing. Again, I like that ratio. I honestly think that, by and large, the stuff that has been getting built has been, at least for the last year, we may have needed some of those apartment complexes a few years back when it first started, but I honestly think that's been an overbuilt market, at least in my local area. The idea that we're seeing single-family residentials being built is very encouraging. So let's fasten the seatbelts and see where this all goes. I think it could spell some great opportunities for a lot of folks, buyers, sellers, investors. I think everyone could potentially benefit. Buyers are going to get more choice. I think that I don't think we end up hurting sellers, honestly. They're simply not building enough. We are still not at a level where sellers in most markets need to be concerned about this dropping the value of their home. In fact, if new homes are being constructed kind of in your general area, that's usually not bad, because in a general sense, single-family residential homes tend to be more expensive than homes, preoccupied homes that are selling to buyers. So it depends on what market you're in, but there's usually a 10 to 20% premium on new home construction in terms of what they end up selling for. So in other words, if you own a single-family residential home, 3 bedrooms, 2 baths, 1,500 square feet, 2,000 square feet, whatever it is, if you are comparing yourself to an identical brand new construction, typically that's costing more for a buyer. So the odds are you're going to be the preferred property. So I'm cool with that. As a real estate person who would have to market your home to compete against new construction, I am all over that. I make that work for my clients every day. So don't panic. In terms of investors, I think this is a great potential opportunity for you, because it'll help you identify markets where things are happening, where new construction is going on. It's more of a way to get a feel. I'm usually not a horribly enthusiastic buy a brand new property as an investment guy, but hey, if the numbers work, the numbers work. So if you can go in and purchase a brand new home, knowing everything in there is brand spanking new, knowing that usually, if anything goes wrong with it for that first year and longer, you can go back to the builder and say, fix this. You screwed this up. And I have investors who like buying brand new construction. Typically, the return on investment is a little bit lower, but they like the peace of mind that anything that goes wrong after they purchase it is normally going to be covered and not be an expense for them. It might be a headache, but it won't be an expense. Okay, next, let's talk a little bit about the numbers for California's December housing. These are the trends that we've been seeing. I did tweet out this article earlier in the week. Overall, the California Association of Realtors are reporting that housing is moving in directions that are not great for buyers. Sales are up 7.4%, so that typically is an indicator of demand, and inventory is down 26.5%. So, and we know that whenever we want to consider these things, the ultimate number we want is that supply and demand number, right? How much of a supply is there versus the demand? Well, we know the supply is going down, given the fact that sales are increasing. So we're actually buying, as inventory doesn't grow and actually decreases, we are constantly reducing the number of inventory because of this higher level of demand. So that creates the equation that ends up having prices go higher. So not great news for buyers, great news for property owners who might be wanting to sell, but not something that's going to feed buyers' enthusiasm for the market at this point. So those are some great national numbers, right? That's what the country is doing. I always like to try to temper that with my local reality. So let's go ahead and take a quick look at some Santa Clara County numbers. Now, this is right up to the minute. I'm literally pulling these numbers up as we're talking. And what I'm looking at now is the current number of active properties versus solds. And when you see sales exceeding the numbers of active homes, you know that you're in a situation where you're selling down your inventory, right? So I'm looking right now at the number of homes for sale currently on the market versus sold. Normally, I consider a healthy number is over 50%. We had a very inventory heavy year this year. So if we go back to January, we're using round numbers here, but what we saw in Santa Clara County, for instance, in January was 1,585 active homes for sale. And in that month, 623 homes were sold. So less than half the total number of inventory, right? That trend pretty much continued. We saw the number of home sales sort of ease up to try to at least close the gap a little bit, say in May and June, where we had 2,582 homes on the market, 1,495 homes sold, so closing the gap. But interestingly enough, what we saw towards the end of the year was a dramatic closing of that gap. In November, we had 1,456 active homes and 1,097 homes sold, so very much closing the gap. But in December, the number of homes sold overtook the number of active listings. And I don't mean homes added to the market. I mean the total pool of homes in the marketplace. The total, and this is all of the county. This isn't just Morgan Hill. This isn't some small neighborhood. This is the entire county of Santa Clara. And remember, that covers a huge area. That covers San Jose, Morgan Hill, my area, Gilroy, Los Gatos, Sunnyvale, Saratoga, Mountain View, Cupertino. All the areas that you read about in the paper that relate to high tech are included in this. And we had, as I said, about 1,000 homes sold versus 849 homes on the market. So selling down the inventory. Now, that is pretty nuts. And if we look back at previous years, let me just change this instead of being 12 months. Let's do the past 3 years just to get a feel for this. The last time we saw that inversion happen, that's too many years. Sorry, let me just do the last 2 years. There we go. Okay. Crowding my screen here. Sorry for the delay. Okay, so I'm looking back 2 years, and the last time we saw more homes getting sold than we saw on the market, let's see, the closest we came would have been, so the last time this happened was April of 2018, where we saw 1,258 active homes and 1,402 homes sold. So that's the last time that particular dynamic came into play. Didn't happen in 2019 at all. In fact, not by a huge margin did it happen. In fact, since April, May, June, since about June of 2018, the inventory has actually dominated. And so now we've just sort of seen this gap close recently, and it's going to feed a crazy frenzy of market activity, I think, in the first quarter of this year. Now, if we look at some other stuff, if we look at the months of inventory, and that is basically it's a calculation that lets you look at the total number of homes on the market versus the rate at which we are selling them. If we look at that, we are at almost the lowest number in the county. Now, this is the entire county since 2017. The last time it was this low was April of 2018, so kind of in line with what we were talking about before with our other numbers. And the other thing I wanted to share with you was new listings versus sold, just to get a feeling for how fast we're backfilling this marketplace. Now, the new listings are ridiculously low and have been really for the last 2 months. If we do a quick look here, at a little bit of a longer period, I kind of want to get some context here. So in terms of just more homes selling versus new listings, that's a more regular occurrence, and it's something that typically is going to happen in the December timeframe. But we're seeing a ridiculous number of homes. We have 1,000 homes that have sold, and only 396 homes have come on the market. So we're absolutely buying down this marketplace. The inventory as we go into the first quarter is going to be really out of skew compared with previous years in terms of the number of homes on the market. It's going to be lower. What's going to be interesting is to see what happens as we move into the quarter. In the month of January, February, March, particularly as we get into April, right? April is sort of that sweet spot when if you're talking about listing your home, you need to start doing it. We'll have to see how many homes get added to the marketplace. But if we look at statistically in the past, given where we are now with inventory and homes getting sold in demand versus the homes that tend to get added during that first and second quarter, we're likely to have a very tight market. We're going to see an awful lot of competition for what is available. And so this is a note to my listeners that are in my area. If you want to get your home sold in the first half of 2020, and I think that's the way to go. I honestly think this is going to be a great year for sellers. You need to start thinking about it now. And it depends on your home. It depends on what your current situation is. I know last year when I was helping folks prepare for the selling season of 2019, I had one client I had to start with in November for them to be ready. And then I had another client who really only needed 30 days. But you should have that conversation with someone you trust now. If I'm that person, great. Give me a call. I'll be happy to help you if you're here in the local marketplace, and we'll figure out a strategy to get you the highest sales price with the best possible terms in the shortest period of time. But I think this is going to be an awesome sweet spot for an awful lot of people. Depends on where you want to go from here. I mean, there's always that mental understanding of, well, if I sell, I have to buy. And in a competitive market, that could be tough. It really depends on how strategic you want to be and how much annoyance you're willing to deal with to potentially offset those problems. But I think that if you want to sell, now's the time to start having that conversation. So call the person you prefer, or if you prefer to work with me and I'm in your area, give me a call. And I'll be happy to give you a hand. Now, for all of you out there, I hope this is valuable information. We're seeing enough changes here that I talk about pivot points in the marketplace. And this feels like one, given the number of homes being built, given the numbers we're seeing in terms of low inventory and increased demand. These are all things that are going to come together to potentially feed a really crazy 2020. So let's go along for the ride together. We'll keep an eye on it and see what the smart moves are. And as always, the hope is I've left you with more knowledge on the table than time you've invested. Absolutely hope that's true today. Thanks again for listening, everyone, and I'll talk to y'all next time.